Explore the 30 critical mistakes in CT return filing mechanics, mapped across 6 key areas including deadlines, submission, and reconciliation. Learn how to ensure consistency and accuracy in your corporate tax returns. Here's a dashboard view of the 30 mistakes at a glance. They span across 6 focus areas, from deadlines to reconciliation, and emphasize the importance of paying in full by the deadline. Visualize the mistakes by area and their distribution to better understand where errors commonly occur. Adhere to these golden rules for CT filing. Complete every mandatory schedule, reconcile accounting profit, check calculations, and get management sign-off. Avoid filing in foreign currency, treating late payments as acceptable, and leaving issues unresolved. Review the master list of mistakes number 1 to 15, focusing on deadlines, submissions, and schedules. Each mistake is categorized by area to help you identify and rectify potential issues in your filing process. Continue with the master list of mistakes number 16 to 30, covering reconciliation, statements, and payment corrections. Understanding these mistakes will help you maintain accuracy and compliance in your filings. In Section A, we address 5 critical mistakes related to deadlines and submission. These include missing filing and payment deadlines, incorrect use of EmaraTax, and errors in tax period containers and CTTRN. Mistake number 1 is missing the filing deadline. It's crucial to file within 9 months of the tax period end to avoid significant penalties. Instead, diarize and file within this timeframe to stay compliant. Mistake number 2 involves missing the payment deadline, which coincides with the filing deadline. Ensure full payment by this date to avoid a monthly penalty. Prioritize timely payments to maintain compliance. Mistake number 3 is the incorrect use of the EmaraTax portal. Proper submission through EmaraTax is essential to avoid errors that could leave your return unsubmit. Always file via EmaraTax and confirm submission success. Mistake number 5 is filing in the wrong tax period container in EmaraTax. This misallocation can lead to unfiled returns. Always select the correct tax period before filing to ensure accuracy. Mistake number 6 involves filing under the wrong CTTRN, especially when multiple entities are involved. Confirm the correct entry before submitting to avoid incorrect assessments. Section B focuses on 5 mistakes related to mandatory schedules and disclosures. These include skipping mandatory schedules and treating disclosure forms as optional, which can lead to compliance issues. Mistake number 7 is skipping mandatory schedules. An incomplete return may be rejected or penalized. Ensure all mandatory schedules are completed before filing to avoid these issues. Mistake number 8 involves treating the disclosure form as optional. This form is required where applicable, and skipping it is a compliance failure. Always complete the disclosure form when necessary. Mistake number 9 is missing the related party transaction schedule. These transactions must be disclosed to avoid understating taxable income. Complete this schedule to ensure compliance. Mistake number 10 involves missing the connected person transaction schedule. Payments to connected persons must be disclosed and tested at arm's length. Complete this schedule to avoid compliance issues. Mistake number 11 is missing tax adjustment schedules. These schedules support the move from accounting profit to taxable income. Complete all tax adjustment schedules to ensure your return is supported. Section C addresses 7 mistakes in reconciliation and computation accuracy, including profit reconciliation and checking auto calculations. Failing to reconcile profit to taxable income can lead to unverifiable figures. Ensure full reconciliation for accuracy. Missing permanent differences in reconciliation can misstate taxable income. Identify every difference for accuracy. Identifying temporary differences in reconciliation is crucial to avoid distorting taxable income now and in the future. Deferred tax assets and liabilities must align with the return to prevent discrepancies that can lead to errors. Aligning returns with financial statements at the line level is essential to avoid immediate audit flags. Checking auto calculations ensures accuracy, preventing errors from unchecked figures. Reconcile and check carry forward losses to avoid under or overstating taxable income. Section D covers 5 critical mistakes related to statements, currency, and sign-off, emphasizing the importance of proper documentation and approvals. Uploading audited financial statements is necessary to complete the filing process and avoid incomplete submissions. Filing returns in the correct currency is crucial to ensure compliance and avoid discrepancies. Obtaining management or tax advisor sign-off before filing helps mitigate risks and ensures accuracy. Finalizing provisional figures or committing to corrections prevents them from becoming permanent errors. Filing a nil return is required even when there's no activity to avoid late filing breaches. Section E highlights the importance of cross-tax consistency, focusing on VAT, TP, and ESR positions. Cross-checking CT figures against VAT positions ensures consistency and avoids inviting questions and audits. Aligning returns with transfer pricing positions prevents contradictions and ensures compliance. Ensuring consistency with ESR positions is crucial to avoid red flags in CT returns. Section F addresses payment and correction mistakes, emphasizing the importance of proper acknowledgement, planning, and disclosure. Confirming payment, not just the filing acknowledgement, is essential to ensure the tax is settled. Using the correct GIBAN reference ensures payments are matched correctly and not shown as unpaid. Paying in full or arranging an approved payment plan prevents penalties and ensures compliance. Settling the final assessed liability, not an estimate, prevents under or overpayment issues. Filing a voluntary disclosure promptly when errors are found helps reduce exposure and penalties. Avoiding all 30 mistakes ensures best practices in filing, from timely payments to accurate disclosures.